Here we are in the studio. I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. It's just a little show I put together every Monday through Thursday. It's your post-market show about investing, what's happening in the stock market, interest rates, Fed policy, fiscal policy, the debt ceiling, personal finance, investing stocks, you name it. We get into it. And a little bit of commentary and opinion, and even occasionally a really cool guest. Today, WTF. This is the WTF edition. WTF is going on with the market. Down, up, down, up. That's what we're going to talk about. We've got a few things to get into, so let's roll the intro. And we're going to put the show together real quick. Here we go. All right, and we're back. Thank you very much. I see a few of you already tuning in. Thank you very much. It means a lot to me that you take the time to watch my little show. I really pour my heart into this and do my best to make it fun, entertaining, and above all, educational and put things in perspective. That's really what we need. My friend Jay gave me a compliment the other day. He said, I put in perspective what it takes journalists and other people, what he said was CNBC, which I love, he said, but you put it into perspective and so fast, and that's why he loves to watch it. He's a trader, by the way. Couple of things today. The market rebounds. We had a big up day on Friday after a really tough week. Then we're all bulled up. We come into the first full trading week of October. Market hits the skids yesterday, and it was up over 400 today. I'm not excited about how today was. The market was up about 311 points, but toward the end of the day, it really started to give up some of its gains. So I think today was more of a technical thing, a oversold market, a bounce back, some portfolio rejiggering, reconfiguring. It's nothing to write home about. All right. So let's give you a quick view of what happened today. Put myself up in the corner here. Dow is sorry. That's the thing about going live. You could sneeze. I'm not recording this, so I'm actually recording it, but oh man, that sneeze came on fast. As I'm talking to you, I'm like, oh my God, I'm going to be sneezing so hard. And once I sneeze, it's like, that's the end of it. There's going to be like 10 more. I'll do my best to hold back on any sneezing in your ears. Okay. But while you're there, keep an eye out for things. And we're watching things here, but the Dow up 311 points, up a little bit less than 1%. Nasdaq was off about 2.25%, yesterday. So it rebounded 1.25% today. S&P was off about 1.5% yesterday, was up about 1% today. Gold down again. A lot of people are thinking gold is like this amazing inflation hedge and that we're going to have inflation. Listen, we talk about inflation here all the time. We just talk about this endlessly. I mean, what's the biggest word in finance for all of 2021 so far? And we're into the fourth quarter, so this will probably remain the biggest word: inflation. We could say interest rates, we could say tapering, but those are all coming from inflation. Inflation first, everything else follows. All right. But we're going to talk about that in a moment, because one of the Fed governors, Evans, governor of the Chicago Fed branch, said he actually thinks not only is inflation going to come down, but it's going to even fall below the Fed's 2% target, because what's happening now is infrastructure problems, bottlenecks, supply chain disorganization, supply chain chaos. Once that is cleared up, we're going to be back to moving goods around like 2018, 2019, when inflation was very, very low. That could be very bullish because it means the Fed could take its time raising rates, even more time than maybe anyone expects. In any event, the U.S. 10-year was up a little bit at 1.5%. Oil had a big day today. West Texas Intermediate 79, so almost 80. By the way, at $80 in WTI and in the 80s on Brent crude. That's the international benchmark. People are now worried about demand destruction as you see gasoline prices go up. People could be more encouraged to go electric and hybrid vehicles. Okay, a friend of mine posted a meme today on Facebook, plugging in, with it was like a drawing of a bunch of Teslas plugged in, and the caption was, "Here are the coal-powered electric cars." It's kind of funny, but listen, most of the energy we get today is from natural gas, not coal, and coal really is a fading energy. The only place where it's really in huge demand is actually China. China. I used to have a branch manager back in the 90s when I was at a company called Gruntle and Company, and he used to say the word China. China. It was just very annoying, but kind of funny also. The VIX down to 21. Remember what I'm telling you here. The VIX, when the goes below 20, the stock market rallies. VIX, that's this number here, 21.3. Okay. When it goes above 20, market takes a beating. It's coming down now. And in spite of, you'd expect it to come down today because the market was up. Usually it does the opposite of the market. But, the whole time, you know, while you've seen the stock market since early September coming down, a lot of volatility, a couple of pretty big down days, the VIX has never really gotten out of control. The VIX hasn't traded above 25, so it definitely didn't go into the 30s. And that is an indication that, you know, this volatility is not expected to last. Gold just cannot get out of the 1700s. It just does not want to go to 1800. That's an indication that inflation is under control. It What gold is telling you is this: the price of gold hasn't been going up in spite of all of the inflation that we're seeing. So is the inflation because of too many dollars, too much demand? Is it because the economy is just running too hot, which causes inflation, which tamps down consumer demand really fast, which then throws us into a recession? But that's kind of, the boom bust cycle we have with the economy. Or is there inflation just because there's supply chain disruptions? I mean, if you raise interest rates and tamp down on, back away from stimulus and tighten availability of money, how does that help supply chain disruptions? It just creates more misery than what we already have. We'll talk about that more in this. Okay, let me get back to what we were looking at. Small cap stocks up 0.5%. Nothing huge. Although small caps have been holding up better than lately than large caps. Okay, let's get into something else here. Goldman Sachs sees a big fourth quarter with a 9% gain from here. Their target is like 4,700, 4,800 on the S&P 500. Okay, 4,700. There it is. Okay, so let me highlight this. 4,700. I highlight it. You just don't see it on your screen, but which is a 9.3% gain from where we closed yesterday. So now it's like a 8.3% gain from where we closed today. But that would be pretty good, and that does not rank. It ranks among the stronger fourth quarters, but not the strongest by any means. But that's Goldman Sachs' opinion, and I think they're pretty smart. They're pretty shrewd. There are a number of analysts like Morgan Stanley and Wells Fargo. Their chief strategists are lower than we are now, and they expect the fourth quarter to go down more. they expect the stock market to go down, a good deal more from here. So let's see who else we have out there. Okay. This is the probably one of the froze up for a second. I'll just talk to you about this, okay? Chicago Fed President Evans, okay, Charles Evans said today. Just want to read you a little caption, okay? Um, I'm comfortable. I'm comfortable in thinking that these are elevated prices that they will be coming down as supply bottlenecks are addressed. I think it could be longer than we were expecting. Absolutely. There's no doubt about it. But I think the continuing increase in these prices is unlikely. He says the current spate of inflation won't last and ultimately will fall below the Federal Reserve's target. Wow. I mean, we keep hearing about inflation, 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 and half of the Fed governors, 9 out of 18, are thinking about in their dot plot, they're thinking about raising rates by late 2022. And here you have one of them saying, you know what? When the supply disruptions are fixed, inflation is going to plummet. And what backs that is the VIX is not out of control. Gold is not flying high. I could point out that oil is going up, but is it going up? Uh, Well, yes, there's demand for oil because we're coming out of a recession and we're coming out of a pandemic. Again, oil, if you recall, about a month or two ago, was going down and down and down because the Delta spread was spreading. The Delta variant of COVID was spreading like crazy, and it was creating demand destruction. Now that Delta, believe it or not, it looks like it's passing already. People are getting back to driving and back to going out, and the numbers are coming in. It's just people are buying more gasoline, more oil. Don't forget, Friday we have the September employment report. We'll see what the unemployment rate looks like. We'll see what wages look like, how many hours in the work week people worked, how many people are working part time who would like to work full time. We're going to find out a lot on Friday, and then following Friday we get into the following week. It's all about the earnings and what corporations have to say about the near future, meaning for the rest of this year and into the first half of next year. And, I think there is some trepidation going into that things could be a little worse. Maybe things won't be so great. And then we're talking about stagflation all the time. All right. Almost no one in the securities industry was in the business during the time of stagflation in the 70s. Almost nobody is in the business today. I mean, I've been in the business since 1990, and I'm 54, and I'm like, I would you'd have to be 54. You have to be like 80, 75, 80 plus to have really lived through that time frame. I was a little kid during stagflation and during the oil crisis. I remember we used to sit in the back of my brother and I would sit in the back of my parents' car while my father would go out for gas, and we'd be on a line for like 2 hours waiting to fill up the gas tank of the car so that my dad could drive to work every day. Yeah, good times. Way to spend your money. And keep in mind, when I was doing this, there were no iPads, no iPhones, no internet. You literally sat in the back of the car and you didn't say a word because your dad was already a little tired, a little short tempered, a little upset with the amount of money that was flying out of his wallet because of inflation. And you really just wanted to remain calm and quiet because you didn't really want to piss off dad any more than he already was. But that was a different time. Today, as parents, we do everything we can to keep our kids entertained and occupied. Helicopter parents, right? I think I am like the first generation of the true helicopter parents. But my kids are getting older, so hopefully they'll be able to helicopter themselves because my youngest is 15 in 10th grade. Okay, so anyway, a couple of other things to look at. We were talking about stagflation. The S word. Am I allowed to say the S word on a live stream? No, I'm not that S word. I'm talking stagflation. What is stagflation? Stagflation means inflation is rising while the economy either stagnates, it just stays the same, or gets weaker. That's stagflation. 1970s stagflation was really horrendous and a miserable time. The stock market was like 8 times earnings. The stock market went to 8 times earnings today. Uh, the misery index would be quite high, and the value of your stocks and your home would be quite low. So that's the real problem with stagflation. That a lot of inflation, and we used to have more boom and bust cycles. I'm not saying the economic cycle is out the window, but today the economy is much more tech centric. We're not in the same goods producing manufacturing economy that we were in the 70s when there was real stagflation. Not to say that a stagnant economy with inflation won't hurt today, but when that happens, companies find a way to lower prices, use technology, automate, and bring prices down. Not really great for labor, but then labor finds jobs in new industries, new sectors. Listen, in 1975, there weren't too many FedEx drivers, right? Not like today. There weren't any Amazon deliveries back then. There was no internet. There was no email. Okay. You get my drift? Much more tech centric economy today. So I don't think inflation is the total crazy bugaboo that it used to be. Boy, we could just harp on stagflation like day and night, but um, I'm getting a little sick of it. Oh, come on. My fourth camera is just let me see, maybe it's a wiring thing. It's just not cooperating right now. So I keep freezing when I hit the camera there. All right, so whatever. I'm just going to go through this. You don't really need to see every little thing I'm looking at. Okay, so let's talk about Amazon. Now, tech stocks have taken it on the chin. That's really what's killing the market. And most of you, I shouldn't say, I'm going to say most of you watching this are in tech stocks. If you're an investor, you're heavily into tech stocks, whether if you know it or not. And you might say, "Oh, I'm just an index investor. I've got the S&P 500. I've got the mid cap index, a small cap index." By the way, you cannot invest directly into an index, but you could invest in a security that tracks or mimics an index. But the S&P 500 is like 35%, maybe more technology. And if you look at the companies in the S&P 500, they're all basically like tech companies today. Everyone is using tech, relying on tech, but it's a very tech centric, concentrated portfolio in a handful of stocks. So Amazon is off what 10% plus from its high already. Um, but JP Morgan sees a buying opportunity in Amazon, and they see the stock going up. Stock has slid more than 11% since its July earnings report, and they see the numbers coming out great for Amazon, and they see it going to $4,100 a share. Okay, Amazon today went out at 3,200. That's a big move. That's like a $32 stock going to 41. That's a pretty good move, and uh, that's what JP Morgan sees on Amazon. So there we go. All right, that's a little better. So this is where Amazon closed right here at 3,200. What I was looking at a second ago is Amazon, even though they're getting hit by supply chain issues like everybody else, the analyst who raised his target, Doug Anmuth, who's calling for such a gigantic rally in Amazon, says what's happening right now with the supply chain disruptions could actually benefit Amazon in the long run because they're so good at adapting to adversity and fixing entire industries, but to their own model. And if you think about it, that makes a lot of sense because we've been seeing this happen, you know, a bunch of times. Okay. Let's go to the next thing here. You're seeing a tweet from Senator Pat Toomey over there, but let's go to the next thing. Hopefully, you'll be able to catch the headline there. You could see that, right? U.S. faces a recession. U.S. faces a recession if Congress doesn't address the debt limit within 2 weeks. That's like the drop dead date when uh, the U.S. literally runs out of money to pay its bills. That's a pretty scary thought because Treasury securities are the marquee, they are the benchmark of the world. That is where most of the world's reserves are held in U.S. treasuries backed by the full faith and credit of the United States. If we don't raise the debt ceiling or get rid of it, then the full faith and credit of the United States will no longer mean what it used to. Full faith and credit means we don't default. And because of that, the dollar is the reserve currency. Our securities are the world currency. Our economy is the envy of the world. Our ability to borrow and spend is the envy of the world. But that all goes away when we default. Now, we could get back on track. We'll get back on the horse. But no one will ever think of the United States the same way as an economic powerhouse. And it gives rise to China, okay, as a competitor in the global economy and as far as their currency as well. So that's a pretty big deal, and that's spooking the crap out of the market. Okay, just saying that. Let's go into some individual stocks. I'm just pulling up a watch list. So before I take you to the screen, okay, I want to show you the FANG M stocks that got hit yesterday really hard. All right. So here we are. Apple was up. Amazon was up $31. Facebook was off about 5% yesterday, like 4.8%. And it was up today 2%. So not quite half the gain that what it lost yesterday. It was off like $17 yesterday. But still, by the end of the day yesterday, you go home thinking, oh my God, Facebook is going to go to zero and the stock could never go up again. Now, this isn't over what's happening, with Instagram and, the company was not doing enough to stop misinformation on Facebook after the election. I know there are a lot of people who say, yeah, I told you they were blocking us and blocking conservative voices. The complaint, the problem people have is that Facebook stopped doing that. And that's why people are upset because a lot of misinformation and hate was going around. So people are thinking, you know what, we want to keep all this crazy stuff, conspiracy stuff on the platform because it keeps people engaged on it. And when you're engaged on it, they could sell you ads, more ads. So, and then the Instagram thing, and it's a contributor to teen suicide. That's what people. That's the accusation. I mean, I believe it. And you might be thinking, well, you recommend Facebook stock, Mitch, in our portfolio. This is new stuff. Teens have always had a self-image. We're always conscientious of self-image to an extent. I think social media magnifies your worst insecurities and builds your ego, or it could build you up or it could tear you down. Is how social media could work. I see a more of a tearing down, and that's what's so sickening about it is that the company in internal documents knew that basically Facebook and Instagram are creating psychological issues for people. They could have been more careful, but it might have maybe hurt the money they make, or slowed the money they make, or whatever. And they're getting a lot of blame here for a lot of bad things. Now, Facebook has their own side of the story and says that's not true. We do everything we can to build communities, to help people out, to spread good information, and we stop the misinformation about COVID vaccines and things like that. And they've done a lot of good in the world. And with almost 3 billion people on their apps, it's really hard to control every little thing. This is going to shake out for a long time. I remember Microsoft when they were the really big pariah of Congress, of Wall Street. Everybody just was hating on Microsoft, and they got through it. And that's like the last really good example, I think, of like what could happen with antitrust. People thought maybe Microsoft could be broken up. Now people are thinking maybe Facebook will be broken up, separate Instagram from the parent company, Facebook, right? Some people think that would be a good thing. But Google today was up $47 a share. Microsoft was up 5. Nvidia was up 7. But I'll just show you. You see these lines, the green and red lines. The red shows you how far these stocks have fallen from their 52-week high. And it's actually quite a bit that Apple has gone from 157 to 141. Amazon 3,700 to 3,200. These are pretty big drops. Facebook from 384 to 333. That's like a stock going from 38 to 33. It's a good move. All right. Google's held in there okay. Microsoft's held in there okay. Nvidia's coming in pretty good, 230 to 204. It's like a $23 stock going to 20. Not the worst thing in the world. It is a tech stock. So those are some of the moves in the tech stocks that have helped the market rebound today, that took the market apart yesterday. And let me just go back to the sector ETFs. I'll show you what worked out today. All right. So the winner of the day: financials, communications, technology, industrial. Pretty eclectic group of winners on the day. What lost on the day? What won on the day yesterday lost today. But utilities and real estate went down a little bit. No great shakes. But everything else worked out okay. Energy has been a top performer. It's middle or low. It's kind of back of the pack, but still positive. That's the XLE. These are the big ETFs, the Spiders ETFs from State Street, okay, that follow the 11 major sectors in the S&P 500. And that's my story. That's it for today. If you have any questions, you better ask now or forever hold your peace. Well, actually, you could ask me later in the comments. And let's see. That's it. The music plays. It's time to end the show. I greatly thank you for taking the time to watch this. I hope it was helpful. And we'll be back tomorrow with another update. This week is going to fly by. I can already tell. It's already Tuesday evening. Take care. Thanks, guys. Bye.